the most frequent questions I'm asked by potential entrepreneurs is, how can I finance my new business venture? Financing is one of the biggest obstacles on the road to starting a business. Most entrepreneurs rely on their personal assets to finance their startup. Others turn to family and friends for the initial funds. Credit cards are also a popular way to finance a startup. In an itsyourbiz.com survey, 78% of the respondents said they use credit cards to finance their businesses. So why do so many entrepreneurs rely on their own resources? Why not go to a bank and get a small business loan? Because banks typically like to loan money to viable business ventures, not risky startups. You may have the greatest business idea in the world, but without a proven track record, it's more likely you'll be turned down than approved. When you apply for a loan at a bank, it's going to want to know who you are, how much money you want, how you're going to pay it back, and what happens if you don't. So here are some things to consider before you apply that may enhance your chances of getting the funds you need. Prepare a business plan. A poor business plan is one of the main reasons business owners fail to get bank loans. A well-drafted business plan shows you understand the business, the marketplace, and the risk associated with the business. A solid business plan should also provide a realistic cash flow projection, which will support the business's ability to repay the loan. If a new business is unable to provide the cash flow not only to sustain the business, but also pay off any debt, there's no incentive for the banks to lend you money. Personal investment. Banks and lending institutions look for financial commitment from you, the business owner. Your willingness to invest your own money, to have what they call skin in the game, is a critical factor in the bank's decision-making process. A bank's not going to ever loan you 100% of what you need to get your business started. So the more you're willing to invest, the more inclined the bank will be to take a chance on you. The lending ratio of how much you'll need to provide versus the lending institution varies, but it's safe to say you'll be lucky if you get to borrow 50% of the funds you need. Personal credit history. The bank will ask for personal financial statements and will conduct a credit check on you. So before you make an application for your loan, take the necessary time to ensure your credit record is clean. Order a copy of your personal credit report well in advance of applying for a loan. So if there are any mistakes on your report, you'll have time to get them cleared up. Now, you're entitled to a free credit report per year from each of the credit reporting agencies. And 3 of the most well-known agencies are TransUnion, Equifax, and Experian. You might actually consider getting one report every 4 months from each of those agencies in order to review it for any unusual activity. Collateral. Collateral is property or personal belongings pledged to the lending source to secure the interest in the loan. Every loan program, and even microloan programs, require some form of collateral to secure the loan. The collateral could be sold to repay the loan should the borrower default. Lenders often look beyond just the business for collateral. So one of the most common forms of collateral for small business owners is the equity in their home. Experience. Include resumes of all the owners and the key managers who are going to be involved in your business. You need to show the management team has the experience to successfully run the business. And if you're looking for funds to start a manufacturing company and you only have experience in the healthcare field, lenders are not going to be very willing to hand you over a check. Shop around. Not all lending institutions are in the small business loan business. So before you take the time and effort to prepare and submit a loan package, determine which banks in your community lend to small businesses. Furthermore, even though the lending institution offers small business loans, there may be a focus on certain industries only. For example, if the bank had a bad experience lending to a construction company, it may steer clear of businesses in that industry. So don't be discouraged if you initially get rejected. Many successful entrepreneurs have heard a lot of no's many times before they finally get to a yes. But keep in mind, a no doesn't always mean no way. Get past the no and then listen to the reasons why the loan request was denied. Sometimes just simple adjustments in your loan package, such as more personal investment, additional collateral, or more experienced managers, may be all it takes to make the deal happen.